Hi, welcome to the Financial Pulse radio show, Vero Beach. Good morning. My name is Danny Howe, CEO of East Coast Tax and Financial Planning, a firm located right here on Azalea Lane right here in Orchid Island. Easy for me to say this morning. It's been a great week. Weather's been absolutely phenomenal. The market hasn't been too volatile as far as downward anyway. Dow reached over 18,000 points, so that's been kind of historic again. And so we really are just seeing quite the rebound in the markets. A lot of people that were very, very nervous are probably happy to see their accounts are starting to bounce back. A lot of people got out of the market, which is completely fine. There's nothing wrong with that when you react and so you get out of your comfort zone. And we talk a lot about that with the Financial Pulse radio show here, because comfort zone is a huge, huge thing. You know, when you fill out those risk tolerance questionnaires with your broker, or you take these different assessment tests online and so forth, those are designed to help you control your emotions, but more importantly, just really meet your expectations, you know, manage your expectations, if you will, when it comes to market movement and fluctuations. And so when we have wake-up calls like what we had at the beginning of this year, where the market really took a tumble, it's a huge wake-up call for folks, because that's a time where you want to get, again, a pulse on your finances, find out exactly what you have, how it works, how it affects you. You want to make sure that you are still taking the amount of risk for the reward that you were originally wanting to do, and that you're still comfortable with that. You know, people make decisions off of extreme pain or extreme happiness in a lot of situations, especially big decisions when it comes to managing money. And so when these type of things happen, it really jars people. People start to do a little bit more research. They get online, trying to figure out what's going on with the market. They call their financial advisor if they have one. And maybe they even start to shop around for a different one because they don't feel like they're getting the attention that they deserve and so forth. So now that we're kind of back to a humming normal, if you want to call it that, you know, it's amazing to me how quickly people forget what it feels like to stub their toe in the dark. You know, as things kind of even out and resurface, especially when they resurface as quick as they have this year during this round, people just got to go back to their normal lives, and that's completely fine. You know, there's going to be volatility in the market. There's going to be risk in the market always. So being able to know that you can get through those things and that you're not subjected to an uncomfortable situation where you're going to be going down significantly more than what you planned on or what your expectation is. You know, here at East Coast Tax Financial Planning, what we do, we have what's called an integrated wealth management system. And the integrated wealth management system does just that. It integrates key, powerful financial elements in your life. It integrates taxation, because we should never make business decisions without knowing the tax ramifications first. It integrates income and making sure that you're taking income efficiently, both on a tax side of things and just making sure that you're not going to outlive your money. It entails liquidity, making sure you have money for those expected yet unexpected events, like tires on the car, air conditioners going out, or God forbid, a health event. It also entails legacy planning, making sure that you have income now, you've got liquidity, you've got your taxes are efficient, but you're also protecting each other in case we would lose a spouse if you're married, or making sure that if you do have some legacy desires of maybe leaving your money to your alma mater or your children or a religious type of organization, to make sure that you're not unknowingly or unnecessarily giving too much taxes to the IRS. And a big misnomer is, well, you know, I don't have to worry about the estate tax laws because, you know, we've got the exemption, $5.34 million on one person, and a couple has well over $10 million, so we'll never reach that. However, there's trillions and trillions and trillions of dollars in IRAs, 401ks, and different types of deferred accounts. Even annuities are tax deferred. So when taxes are never paid on monies that are in an account, when that account is dispersed, it could be a huge tax ticking time bomb. So even though you may not have an estate tax problem, you could very well find yourself with a death tax problem, because once those monies, you know, they pass to each spouse as an IRA with no issue, but there's kind of some fuzzy and gray area when it ends up in the kids' hands, or the organization that you're going to be leaving those IRAs, 401k monies too, because they may not know the laws or know the things that they need to do in order to stretch those IRAs and deferred accounts so that they can manage taxation as they take them out. You know, if your kids inherit dad's, you know, $600,000-$700,000 IRA, and they don't know any better, and they just cash that out, you know, send a death certificate into the big brokerage house, they cut the check minus mandatory taxes, and all of a sudden they just paid 30-40% in taxation on that huge account withdrawal. So you want to make sure that all of those elements, and that's what the integrated wealth management system is all about, that all of those elements are taken care of. You know, the integrated wealth management system was designed here at East Coast Tax Financial Planning around this question, and I do this every week, but I'm going to bring it up again. When is the last time that you sat down with your insurance advisor, the person who sold you your annuities, long-term care, life insurance, things like that, your stockbroker or your investment advisor, the person who handles your money in the market, and your tax advisor, your accountant, your CPA, EA? When's the last time you had all three of those individuals in one room talking about you, your money, and your goals? A financial board meeting, if you will, for your family, or if you have a business, for your business. Because if you don't do that, if you don't have somebody coordinating all of those relationships and all those different powerful elements in your financial life, you could end up with one foot on the gas and one foot on the brake. And I know that sounds a little bit redundant on some of my shows because I talk about it so much, but it's so important. You know, if you're losing thousands of dollars to taxation inefficiently because you just didn't know any better, because the accountant and the financial advisor weren't communicating, or the accountant and the insurance guy weren't communicating, or God forbid you just made a big mistake because you missed an RMD or whatever the case may be, that leaves you as the quarterback. And when would you like to know whether you're losing out on thousands of dollars in inefficient taxation strategies? You know, most people want to know yesterday, right? And this is the perfect time of year to do this. You may have just had your taxes prepared, and that's a great time to look forward to 2016, the rest of 2016, to make sure that you are structured properly. You know, if you're taking RMDs, required minimum distributions, for the first time this year, maybe you've just turned 70 years old, 70 and a half years old, then that's a key turning point in your financial life as a retiree, because you are now forced to take withdrawals out of IRAs and 401ks. And the laws and the rules around that can be a little bit hairy and complicated. Most people think, well, I have to take it out of every single account. So if I have an IRA, I have a 401k, and I've got a 403b, and I've got a 457 plan, all of those operate similarly in that they're tax deferred. You saved money putting money into those accounts on taxes. Now when you take them out, they're taxed as ordinary income. So a lot of people say, well, if I have to take out, let's say it's your 70 and a half, usually it comes out to about 3.8% of whatever the value of those accounts are, is what you have to take out that first year. Well, if you only take out the money out of the IRA, and you don't take the money out of the 401k or the 403b or the 457, all those other accounts that you may have, if they're classified differently, you could run into a serious situation, a pretty stiff penalty with the IRS. It's a 50% penalty by not taking what your required minimum distribution is. But they don't let you off the hook with just that. What they do is they say, okay, well, you missed it, so we're charging you a 50% tax penalty, but we're also going to make you still take it out. So you still have to take out that last year's RMD, plus you have to take out this year's RMD, and you have to pay income taxes on all of that. So it could be a very hairy situation, not knowing what those little tax rules are and nuances, just by taking simple withdrawals out of your accounts. Now, there are other situations where we can consolidate all those accounts and make sure that they are all classified the same, so that you don't make that mistake. If you missed one but you satisfied it by taking enough out of another, you're in good shape. You know, if you have 8 IRAs, for example, and they're all traditional IRAs, you could satisfy your RMD between all of those IRAs just by taking out enough out of one account or out of 2 accounts. But where the sticky situation comes into play is when you have 401ks and 457 plans, all these different types of accounts. Even though they're treated tax-wise the same, you have to take different withdrawals out of each one of them. So Danny Howells with the Financial Pulse Radio Show. Thanks for joining us this morning, folks. We're going to be right back after the break. If you want to get an idea about your RMDs, you want to make sure that you're not making any mistakes, or if this is a first year especially and you want us to help you out with that, give us a call, 774-7970. You can always visit us at thefinancialpulse.com. That's thefinancialpulse.com to get more information and register for an appointment on there. We'll be right back right after the break.